Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a great weekend. It is non-farm payrolls week next week, so bear that in mind when we go and have a quick look at the calendar. That is the key event heading into next week. And a quick note to say that next weekend there will not be a weekly Forex forecast as I am away. However, I will be resuming once again the following weekend on the 10th of December. Okay, so a brief look at the economic calendar. We do have some important events coming out next week, consumer confidence, some GDP out to Canada, etc. But there's nothing we really need to plan our trades around for. Powell will be speaking next week. And also we have the core PCE price index coming out, which is Powell's preferred measure of inflation, alongside the manufacturing PMI. So there is a number of data coming out which can move the markets. However, it is non-farm payrolls on Friday, which is likely to be the headline event next week. And although this is a lagging piece of data, employment data is not a leading economic signal. Very often you can see markets, especially the dollar, being corrective leading into non-farm payrolls. And I do think next week we could see a continued correction in the dollar. Okay, so if we look at the scores for the coming week, you can see last week it was the Swiss franc to the upside and the Canadian dollar to the downside that was highlighted as the best opportunities. And CAD shorts last week were by far and away the best Forex trades. We had a big sell-off in the Canadian dollar as crude oil also sold off. And paired against the Swiss franc, that was a great trade last week to the downside, and also against the yen, for example. And also EurOcad we looked at to the upside last week was also a good move in the Forex markets. Coming into this week, you can see, first and foremost, the markets are again choppy, they are range bound. Opportunities have dried up, and this was after the big move we got off of the CPI out of the dollar. A lot of markets rallied. We saw the Swiss franc, which we've looked at in previous videos, the Japanese yen, big rallies in those markets as well on the US CPI data, and now the markets have been correcting since then. So that's the first takeaway here. Don't take too much risk in the Forex markets because opportunities are somewhat drying up after that big CPI data. But the Canadian dollar to the downside is still highlighted as the best opportunity. And although there are no outright bullish, which is a score above 2, currencies, it is the euro and the Japanese yen also that I think are the better markets going into next week. The Swiss franc is still relatively the strongest currency here on a 1 month forward looking basis. However, you can see it is down on the week, and very often this is what you see when the market is about to correct. So I am still interested in Swiss franc longs. We'll look at Aussie franc to the downside, CAD franc to the downside, but just bear in mind we may need near-term correction next week in those franc pairs before they start to move. Okay, so if we look at the individual currencies first before moving on to the market, starting with the dollar, you can see this was the big 3 standard deviation move that I was highlighting on Twitter and also in previous videos, that when you have these moves, the markets tend to correct, consolidate after that. And we did see a consolidation, then we sold off and we started to pause down here. Now in last week's video, I covered the bigger picture in the dollar. We're not going to go through that again today, but if you are interested in the bigger picture here, go and have a look at last week's weekly Forex forecast video because we cover in detail the bigger picture, how I think the DXY is likely to play out. However, heading into next week, especially since we have non-farm payrolls and the dollar itself tends to correct in non-farm payrolls week, I do think what we're likely to see here is perhaps a slight pause on Monday. And I would not be surprised at all to be coming back, retesting this high up here for an A, B, and a C. And this basically implies near-term dollar strength and therefore likely some risk off coming into the markets next week. That would be equities to the downside, commodities to the downside. And in terms of the Forex markets, if we do see the DXY correcting higher or pushing higher, that will also, if it brings risk off, will benefit the Japanese yen and also currencies like the euro, but against the commodity currencies like the Aussie, pound Aussie to the upside, etc. Now, what is also possible next week is, say we were to come down on the Monday and test the low, I still believe downside there is going to be somewhat limited. And that would actually, therefore, also, in my opinion, lead to a bounce to the upside in the dollar. So I do think we're coming back to the 108.0 in the dollar in the near term. Whether we test the lows first or whether we just correct for an ABC remains to be seen. But I do think that's going to bring some risk off into markets next week. Okay, so if we look at the euro on the daily chart, you can see the downtrend is still clear And as it currently stands, this should be viewed as a larger pullback. Why? Because we've only come back in the euro to retest the 7-year breakout of the 1.03750. And above that, we have the 4-year breakout, which we've been looking at pretty much all year. We've been following these levels. Now in the euro, you can see we have big momentum and we pulled back. What I think we're going to see, I think we're going to start to see the euro consolidating around this level. And if the dollar does, which is currently doing this, if it does come back for a deeper correction in that C wave, you're likely to see the euro pulling back. And once it does this, I do think the next move up is the previous high. And this, as I said in last week's video, is where I think we could see a double top in the euro. And in the dollar, that would be the double bottom in the dollar from the potential 4th wave corrective area. We looked at this in last week's video in the bigger picture. And that's when I think we could see the double bottom for the next rally up in the dollar. And also in the euro, that would be the double top for the next leg down in the euro. So as you can see, if we come down first, test the lows, and then rally to the highs, especially with non-farm payrolls, we could be in for a kind of ranging week and some near-term consolidation in the euro, the dollar, etc. Next is the pound. Now the pound is also still in an overall downtrend. You can see these are the larger waves to the downside. And this leg was so sharp and so steep, and we finished here with a flash crash, that we basically had a much deeper, sharper correction. And as this correction continues to the upside, you can see we're testing into the highs, we're starting to lack momentum. I again would not be surprised to see this come down a little bit and then up a little bit higher, possibly even testing the 1.2295, and that to coincide with the dollar doing an ABC and then coming down, testing the low like this. And that is where I think we could start to roll over. A test of the previous high in this overall downtrend and then start to roll over to the downside. Even if you were looking at a bigger reversal in the pound, this is what you would expect to see, because very often it rejects from this area and then you get a right shoulder and then you get the reversal. So whether this is going to continue for the next leg down to the lows, which I think is the higher probability, or if we start to form a right shoulder, either way I think we start to reject from the 1.2295 in the pound. Next is the Swiss franc. Now the scorecards did give us a signal to say that the Swiss franc is likely to correct somewhat, and this was when it went from 3 to 2 this week. We went down -1 in the franc score. And very often that is what precedes, that's forwards looking for corrections in markets. So I would not be surprised to see this come down a little bit lower. This, I believe, feeds in with the dollar index doing that ABC. And then I think we're going to come up, we're going to flag, this would be an ABC bull flag in the Swiss franc, and we're going to take out the highs here. Now I did discuss in last week's video why this is very significant, because we have huge momentum, and if we take out the high, this is actually where a new trend is born in the Swiss franc, and this would be viewed as an inverse head and shoulders over here. So potentially quite a significant move to the upside coming in the Swiss franc, but especially with non-farm payrolls, I think we see a near-term correction consolidation first. Next is the yen. Also bullish on the yen, but again, you can see it does look like we're going to come down and correct somewhat in the yen. So maybe a little bit of near-term weakness. However, the overall picture is for consolidation and a break higher. And again, in the Japanese yen, this would be the inception of a new trend on a break above this high over here. This would be a confirmed inverse head and shoulders. And just like the Swiss franc, this is indicative of quite a large risk-off move were this to materialize. In the near term, again, I think we see a consolidation in the Japanese yen. Next is the CAD. Now, if you look at the CAD was a really good short highlighted by the scorecards last week. In fact, it was highlighted as the best market to the downside. However, you can see 1, 2, 3, 4, 5. We pretty much finished the week where we started. The reason that the Canadian dollar shorts worked so well was because relative to the other currencies, it underperformed. So we could come up a little bit higher next week, especially if the dollar starts to correct and these markets correct. Maybe we form a double top up in this area for the next leg down. You can see this is a big bear flag as it currently stands, and we are approaching the underside of this breakout over here. So I would not be surprised to see this retesting the highs once again. However, as the dollar comes down, test the lows, I do think that's when we get that double bottom in the dollar, and I think that's when we start the next leg down in the CAD. Aussie dollar, very similar to what we just looked at in the CAD. This is the previous leg down in the bigger picture, and as it currently stands, we are in a bear market rally, a correction. So I would be anticipating this to come up test the highs and possibly the 0.68570. The question is, do we come down for an A, B, and a C first and then test the highs, which is what I think we're likely to see as the dollar does this? Or do we actually test the highs first early on in the week? In which case, if we do test the highs first early on in the week, if we come up like this on Monday and Tuesday, and the dollar, instead of doing an ABC, actually tests the lows on Monday, Tuesday, then we're already in that stage where we could see the next rally up. And perhaps that is what it does. It takes out the high, tags the 0.68570, and then on non-farm payrolls on Friday, if we get a better than expected jobs number, we could see this selling off, and that could be the catalyst to form the double top in the Aussie dollar and also the double bottom, which I've been discussing in the DXY. So I think a lot is going to depend on that jobs number next week. And I wouldn't be surprised to see the dollar correcting or testing the lows into that and then potentially reversing. Next is the New Zealand dollar. We came up and took out the 0.6228 last week. Again, we should be treating this as a bear market rally. Here is the previous leg down. And although this is sharp and deep, it is not yet a reversal. And I am looking for the New Zealand dollar to double top or reverse in this area somewhere as the DXY trades into the low and into that fourth wave area we looked at in the bigger picture last week. As that happens, I'm expecting the New Zealand dollar to start to roll over. Whether we double top or we form head and shoulders, who really cares? If we start to reverse in this area, I do believe the next leg down takes us to the 0.54660. So again, perhaps we consolidate into non-farm payrolls, and that provides the catalyst if we get a good jobs number for the next leg down in New Zealand dollar as the DXY rallies. Okay, so let's look at the markets themselves, starting with crude oil. Crude oil has been a market that I've been highlighting to the downside. We've had some fantastic opportunities to the downside in crude oil, and last week we sold off again. So any pullback in this market once again is simply viewed as another opportunity to look for shorts into the 74.23. Next is EurCad. Now, these markets highlighted in gold are the markets that I think present the best opportunities next week. But just bear in mind, the scorecards are showing us there aren't too many fantastic opportunities because a lot of the markets are failing to score 2 or more or -2 and less. So just bear that in mind when you're trading next week. It's not a great week, especially with non-farm payrolls, to take lots and lots of risk. And we may see the markets correcting until non-farm payrolls, and then we start to move. Last week, EurCad was a market highlighted to the upside to look out for, and we did take out the 1.3890. Heading into this week, I do still favour long positions in EurCad. We're quite close to the target, so what I would like to see is any pullback in this market is once again viewed as an opportunity to look for bullish reversals into the 1.3976. And if we trade into this level and then reverse, I would be looking up towards target 2 at the 1.4287. Next is CAD yen. CAD yen was consolidating last week, and I highlighted this as a market to look for further declines. We did have a really nice sell-off, and we've started this kind of bear flag. So any continued correction is simply viewed as an opportunity to look for shorts down to NzdUsd support at the 101.76. Next is pound CAD. Big breakout to the upside in this market. You can see we kind of have this sort of an ascending triangle pattern. Then we get the break with momentum, and now we're starting to consolidate. So what I'd like to see here is a deeper pullback. Any deeper pullback is viewed as an opportunity to look for bullish reversals. I'm going to be looking into the 1.6332. And the final CAD pair is CAD franc. Now, not highlighted in gold because the Swiss franc has gone from 3 to 2, so it's showing near-term consolidation. So I favour the other markets here. But what I'd like to see is we did take out the target to the downside at 0.70610, and CAD franc was highlighted as the best short, and this did pay nicely last week. Heading into this week, any pullback in this market, and again, if we're going to get the Canadian dollar and the Swiss franc correcting as the Swiss franc corrects, I wouldn't be surprised to see it even come back and retest this high over here. And any pullback towards this area is viewed as another opportunity to look for bearish reversals down to the 0.6993. So next week, the CAD pairs are my number one Forex opportunities, and also crude oil to the downside. I do think they represent the best opportunities heading into next week. After that, I am looking at Australian dollar short positions. You can see here we are starting to form a potential right shoulder in EurAud. What I'd be looking for next week then, because we are coming down, we might come a bit lower, but if we can reverse and get some momentum to the upside, look for a break higher, and that will be the opportunity to start to look for bullish setups into the 1.5702. Again, just bear in mind the Australian dollar is not super weak, it's actually only bearish to neutral, but after the Canadian dollar, it is the next best short. Next is Aussie yen. Now, Aussie yen is a market that I like to the downside. In last week's video, we looked at the major head and shoulders forming in the bigger picture in Aussie yen. But recently, it's just consolidated, and in fact, you can see it coiling and coiling, getting tighter and tighter. So perhaps we come up, test these highs, maybe even test this high next week, but any pullback in this market is still only viewed as an opportunity to look for bearish reversals. I'm going to be looking down towards the next key of support to the downside at the 90.53. And again, in last week's video, I highlighted the break of this is in fact the break of a right shoulder in the head and shoulders here if we zoom out. And the final Aussie pair is Pound Aussie. Now you can see we've started to break out. This is actually a double bottom here. We came up and you can see tested the low, then we broke. This is a confirmed double bottom in an overall bull market, and this is a big bullish consolidation down here. This is where we double bottom. So any pullback in this area is viewed next week as an opportunity to look for bullish reversals into the previous high at the 1.8190. And finally, we have the dollar pairs. Now, I do think, especially with non-farm payrolls, the dollar pairs continue to correct. And we're looking at this in the daily chart just to get a better understanding of what's going on in the dollar pairs. I would not be surprised to see euro dollar, for example, and at the moment it's just crisscrossing the 7-year breakout. But I would not be surprised to see this do one of two things. Either take out the high before Friday and then reverse to the downside with a double top on non-farm payrolls. Or if we come down and take out the low into Friday, I would not be surprised to see non-farm payrolls reverse it from the low into the high, and then we could be looking at a double top heading into December. So patience required on the dollar pairs because of non-farm payrolls next week. And one thing I will also be looking for, because I do believe this could be a near-term double top in the euro, I am looking for that potential setup where we trade into this before non-farm payrolls and then confirm the double top on a strong jobs number. So keep an eye out for that next week. Next is US dollar franc. Now I think you can see clearer here because of the momentum and the correction, this kind of A, B, C pattern we could be seeing in the dollar into non-farm payrolls. You can see the pullback, and I think we could probably see this coming back up and testing the high here, and then you get that reversal to the downside, taking out the low. So that's what I'm looking at potentially in US dollar Swiss franc next week. Again, if that's the case and that does materialize, we move up into this area, test this high, and then we roll over. That, of course, in euro dollar would be an ABC and then a test of the high over in this area. So again, that is what I think we could be seeing, and that is also confirming what we're looking at in the DXY, which is currently like this. That's why I do think after that 3 standard deviation move down, we could just have a bigger correction ABC into non-farm payrolls. Either way, once again, I do think non-farm payrolls next week will dictate the next move in the dollar. And the final dollar pair here is New Zealand dollar, and you can see in New Zealand dollar, again, we are still in an overall downtrend. We are still making lower lows and lower highs, and this should be viewed as a bear market rally. So any pullback in New Zealand dollar, I would not be surprised to see this coming down lower if the dollar does start to consolidate higher into non-farm payrolls and then rallying for a double top. I do think we're coming close, especially as this is the previous high. Whether we come up and test the previous high or we fail to test the previous high, which of course would just simply be confirming the downtrend, a lower high essentially, I do think we're quite close now to a reversal to the downside, and I do think the New Zealand dollar comes down to the 0.54700 in the near future. Again, a lot will depend on that NFP number next week. Okay, so wrapping up the video with gold, silver and Bitcoin. On the daily chart once again, to look at the bigger picture here, you can see we are starting to make our way down after this sell-off to the downside and a consolidation down to the 78.62 in the gold-silver ratio. And that's why I do favor silver long positions, or rather I favor silver to the upside versus gold heading into next week. Starting with gold then, what I think we're going to see next week in gold is I do think we're going to pull down, perhaps test the lows, and I think that coincides with the DXY doing this. And if that's the case, then as the DXY does come back down to the lows, I think gold comes back up to the highs and likely onto the 1807.16. So look out for this move in gold, but again, with non-farm payrolls, we might just kind of be corrective next week. But that's what I'm looking for next in gold. Next is silver. Silver also pulling back after a big momentum move. And again, I think we probably come down, test the lows, and we have this A, B, and a C. And that likely coincides with that bigger correction I was looking at in the DXY. Then as we test the lows in the dollar, this is my base case, we test the highs, maybe and likely testing the 22.49 as the next target. And then as the dollar reverses, and if we get a double bottom in the dollar, that coincides with the double top in silver, and of course the next leg down in silver. Near term, however, I do think we have a little bit more upside left in this market, and I do favor silver to the upside over gold based on what we're looking at in the gold silver ratio. And last but not least, we have Bitcoin. Now Bitcoin has become much harder to trade because it's just been consolidating very tightly recently. We did have a big sell-off, but again, after a big sell-off, look how tight this has got. You get another consolidation correction. So I wouldn't be surprised to see Bitcoin pulling back deeper, because that's what happens after very steep sell-offs like this. So any pullback in this market would be viewed as an opportunity to look for shorts once again into the 14,858.30. However, I don't think Bitcoin is a fantastic market for next week. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. If you enjoyed today's video, why not consider joining us during the week, where I share my charts as well as the setups that I'm personally looking at trading with members on a daily basis. And we also publish the scorecards for over 75 markets in different asset classes, including Forex, stocks, bonds, and commodities. You can find out more about the benefits of GMT membership by clicking the links in the description below and also in the pinned comment below. So thanks for watching. The only thing left to say is take care, and don't forget to trade safely.